The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Hi, folks. Basil Chapman sitting in for Darrell Martin, and this is going to be an interesting session, so it's perfect timing. Let me show you, well, first of all, this is the Diagnostic Trading Hour with Darrell Martin, with Basil Chapman sitting in for Darrell Martin. I, of course, could not do any of the work that he does on that Nadex platform. He has a fabulous program to work with. I'll do my best. I'll show you other aspects. Remember yesterday I was talking about the Apple chart, the 10-minute chart? Let me show you something. And we was at the point where I said there's an alternate count. I didn't want to consider the alternate count until we had a little bit of a pullback. It was just a tiny pullback. And I said, whoops, that makes it probably leg B. Now let's go to this. Whoops, where am I? Here I am. Apple. This is the blank chart. This is what I call the naked chart of Apple. There's nothing else. There is just, I put this on a little later on. It's the Fibonacci expansion. But basically, it would have been looking like that. And we were right at this point when I closed out the show yesterday. And what I was saying is that if there was a move just a penny above the Apple high of 210, well, it couldn't have been 210 because I was off the show. I was off the show at 2. So it was right there. So I had said we were looking at the 2-minute chart, and I said if there's a break above the 118.26 level, we've got to consider that it could be an F/B in the 10-minute chart. And if it just pulls back very mildly after that, we've got to consider that it's recycled. Well, lo and behold, what is the methodology in the Chapman wave? Right here, let me show you. This is slide 348 out of 476 slides in the presentation I give for the Chapman wave methodology, available at TFNN. It's a CD book called Introducing the Chapman wave Methodology. And right here, we've got the instant restart. And in this particular case, oh, that wasn't even the chart that I wanted to show. Now, will I be able to find the chart that I wanted to show? That's a pity. All right, well, this is very important for the actual analysis that we're looking at right at this time in the daily charts. So give me a second here. Let me write down 348 because we'll be back to 348, slide 348. I want to go to what I wanted to show you earlier, 348. Okay. Now, I want to just move back a little bit here to about there. Oh, that's a cartoon. Oh, yeah, I love this cartoon. If I can find there. So this is slide 127. These are my cartoons that I drew. I was a cartoonist for a long period of my life. Oh, no, I should say the middle period. So husband and wife climbing this mountain, and she says, so big. This is actually so apropos. I was thinking of a different chart, a cartoon that I showed, but this is actually perfect. She turns around and says to him, so big deal, the day after you finally take the plunge back into the market, it drops precipitously. Let's just forget about it and enjoy the view. They're climbing. Now, he's in the lead. And as he gets to the top, he says, so she says, let's just forget about it and enjoy the view. And he says, I was, but all I see now is deja vu, and he's at the top of the mountain, and you can see it coming down. So this is perfect. And that's exactly what happened to Apple right there. Look, here's the Apple chart. Right there. It goes peak A, B, C, D, recycles. That's an E/A, F/B with a doji top, but it doesn't pull down. That's F is where you should get the sharpest decline. It doesn't. And it goes to a C, and then it gaps up today and goes where? To a high of 119.75, and it's trading right now at 118.90, having made a low of 117.45. Isn't that interesting? So basically what we do, as I say, these are the naked charts. There's nothing here other than the technique of the Chapman wave notation. That's number one. Number two is I was asked about the E-mini. So we'll go to the E-mini right now. This is December contract. And what does it do? It goes from the lowest, most obvious low bar. That's the Chapman wave technique. And it goes peak A. In a 10-minute chart, I'm very strict. Hardly ever will I take parallel highs as a phantom peak. Anything less than 10 minutes, like 5 minute, 3 minute, 2 minute, 1 minute charts, I will do that. Or if I'm looking at instruments that have 25 cents instead of a penny, like the S&P or the Dow or something like that, if it's futures and it has a quarter, I might have a little leeway, but most of the time I'll try to be as strict as possible. And you expect at least 4 peaks, but it should go 5 and 6, even 7 peaks. But in the meantime, back at the range, look what happens. It goes peak A, B, this is called the stair-step move. Up, down a little bit, up, down a little bit, up, down. Very hard to trade in the Chapman wave methodology if you're considering stops. Why? Because look, from the A, let's just say the confirmation for A was the breakout just above the high of A, and you went in long there. Where would you put the stop? Well, I'd like to put the stop at least underneath that doji candle there. At least one position must have a stop under it. And each time you could almost have got stopped out. Yeah, you would have got stopped out from peak C to leg D, and then the peak D, because it dropped so sharply. But that doesn't mean it's not going to go to D without breaking the initial low bar. That's the technique. So it goes peak A, B, C, D, pulls back, and then it suddenly goes E and F. If I was looking at this on a chart with the MACD and the slow stochastic, my guess is that it would have taken you there. The stochastic would have had a good pullback, and then there was what I call the camel hump, the double hump, and then there's the M-shaped pattern in the stochastic, which rallies quickly and allows it to go higher, and then it pulls back in time and price. And this gave you the deepest price and the longest time before it really broke out there. And even in this, it's gone peak A, B, C, gone to a D, E-mini's double top at the high of 2073 round number, and it pulls back, and it pulls back really quickly to where it pulls back all the way to 2062.75. Hey, that doesn't sound like a lot. 11 points, that's a lot of E-mini points in the 10-minute chart, and it goes trough A, trough B. If there are only 2 troughs, that's usually very positive for a pretty decent bounce. What does it do? It goes back peak A, B, C. This is a 10-minute chart, remember. I'm using nothing. I'm using just the Chapman wave methodology. And this says that there is a chance right here, at A, this is going to be critical. If the pullback from peak C is a little too deep, my guess is the pattern that we're looking at is an H pattern. What is the H pattern? The H pattern is, in fact, this pattern right here, the one that I used to call the dreaded H. Now I just try to call it the H so that there's no presumption that it has to do anything. Just that the lower H has to close above that low if there's to be a successful retest. But breaking even from this level down to the last trough would be a very big negative and suggest we're going to test the lows of the day. So the question then was, Basil, based on the 10-minute SPY diamond chart, can you tell if we are going to rally into the 4 p.m.? I'm thinking that a lot of the work has already been done. I'm beginning to get signs that are saying, now you've got to be really careful. The upside is still I said yesterday, the upside is very limited. I'm saying to my subscribers to my opening call. My opening calls are very comprehensive, daily look at the markets. I always feature, I wonder if I can show it right here, if I even got it up. Let me just check. Right there. Let's see if it comes up. Yes. So here we are with, if I can find which one it is, right there. Is that correct? Yeah. So this is what I showed my subscribers this morning. and I'll explain it to you. Here's the E-mini. This is the 120-minute chart using exactly the same thing. I discussed that there was a chance, because I sent it out right there, there was a chance that there was going to be a little peak C on. Let me just explain a little bit carefully. From the low bar, I drew a rectangle which has been support. From the low bar of 2035.35, it went up with a peak A, a peak B. This is the E-mini. December, peak C, and then it pulled back. And what I identified was there was a trend line support. There was that peak C that was missing D. And at the same time, it went to peak A, peak B. I call them gray peaks because they're underneath the major one. The technicals were starting to slide. The MACD was deflecting lower. The stochastic was still under 80%. And what I had said was there could be a chance of an overlapping wave. What is an overlapping wave? An overlapping wave is in my CD introducing the Chapman wave methodology, right here, chapter 16. Right there, overlapping wave. It discusses in detail exactly what you look for, and it says that within a certain, here's an even better one, right there. Within a certain rally, if you pull back and then start making peaks to match the previous peaks, when it takes out the previous letter, usually it's a C. In this case, for the example on page 324, it's a B. So it goes to B minus because it pulls back and uses up time. Usually you can even get identifying candles to help you say, whoops, we're going to go back in a kind of a rectangle move to the upside. And if you overlap that left side peak with the letter that combines with the latest one, that's the B, peak B, and that's the one B minus, it reactivates that previous B, and it becomes very powerful. If it's a B, it will go to a C and even a D. If it's already a C, you can expect a D. Very often it's a powerful D, but it could be a D. And then you've got to be careful, because the rule of thumb in the Chapman wave methodology is that in an overlapping wave, when you get to D, you come right back and test the lip of the breakout. Well, look what happened. This is where we left off, and I gave a commentary here. I never give buys or sells on the E-minis because that would be a different service altogether, but I always explain what we're looking at, that the 9-period moving average, the E-mini daily is walking the 9-period moving average, that black line. The MACD is very strong, stochastic's very strong. But I also mentioned yesterday that I have certain indicators, one in particular that's flashing that says to me, be careful, be very careful here. Upside is probably going to be limited. Well, look what happened. Oops, look what happened to the 120-minute chart of the E-mini right here, if I can find it. There it is. The E-mini right here is showing you. Here's the break. As we go to the break, there it is. It went to that D right there, and then it pulled back quite sharply. We'll be back. Basil Chapman sitting in for Darrell Martin, and we will go through this E-mini chart and discuss some of the techniques available. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so what we were looking at before is the, let me just get back there, is that 10-minute chart. Lo and behold, look, it went right to that doji candle, leg D, above the 207.2.25. It just needed 25 cents more, and it went to 207.3, 75 cents more, and it made that leg D, then peak D. But the MACD is not opening up in the beta of the MACD. That's the distance between the differential, 9-period differential, and the red line and the green line. The green line is a faster moving average. And it hasn't opened up very much. It's trying to flatten out, making a soft W pattern. If it deflects lower again, I'll explain what I'd be looking at. But the stochastic has pulled back to 62 and is attempting to turn up. So what you need to be seeing in this 120-minute chart is to see the shorter time frames accelerate higher. And as I said before, in the 10-minute chart, let me go back to the 10-minute chart if I can. I want you to show some. You remember I spoke about that I do not want to talk about the double camel hump pattern, other than to say, because it's a little confusing, think of it as the H pattern in the stochastic, because look what happened. Right there, it pulled back. That was where you got the peak D. Then there was that rally that failed. That's what I'm talking about. It failed, didn't have the strength. Now what you've got is a peak A, B, C, and the MACD is moving very strongly. instead of breaking under the 9-period moving average to test the 2066 level of the 200-period moving average in the 10-minute chart, the stochastics at 77%, it needs to break and hold above 80% to hold this. But if you get leg D above 2070.50 in the E-mini, let me put this in here as well. That's A. There are two fighting patterns. I didn't have a chance to do that because we went to break. But the two fighting patterns is what I normally would be drawing. One is either a V or a cup formation. In this case, it's almost like a V pattern. It goes like that, and then it goes straight up. And it says that within a certain period of time, if you want a measured move, there should be a measured move from there to there. And it's very easy for me to color this in green, and that goes right to there. And that would say that would be an absolutely ideal situation. But when you've already gone this far, you have to say, it's probably going to be more like a cup formation, like that, on the right side. This is still a 10-minute chart. And what would I be looking at? Now, there are two fighting patterns. One is the Chapman wave H pattern. So I said I'd look at that. The H pattern is, I should remember these now. I think chapter 17. Yeah, we looked at it earlier, chapter 17. So the H pattern says this scallop formation, where you keep making little arches that fail and break the left side low, can continue until such time as it makes a lowercase, that's a lowercase h, to a lowercase m. So the idea is that any of these should hold very nicely way above the left side low bar and then break out to a higher high. Usually they will fail at a peak A or B. Usually it's a B. In this case, it's even a C. Getting to a C is normally very positive. That's where you want that's where your technicals can help. That's where the 9-period moving average can help. That's where all these different additives, additional tools can give you a heads up. But just the pattern alone says that so far it's held very well, the ESZ14 10-minute chart. But in a bull phase or a bear phase, speed is your friend, and the less number of troughs or peaks is very strong, or the least number. In this case, it just went to trough A and trough B and went up. That's usually very positive. And certainly there was a big move here, almost a 2/3 rally. Now what we've got is using up time. And that's really what I think. The question is, how will we end the day? Will there be a last hour run to the upside? And my answer is, there's just a little too much hesitation. I'm getting too many signals right now to say that, yes, you might have it, but I think that the weight of evidence is that there might be some hesitancy today. I thought that today would give you, well, today did, okay. I'll finish this up in a moment. I want to jump again because it all relates to techniques. I spoke about the instant restart. In the Chapman wave methodology, there's a technique that I talk about, and that is, I think it's 13. Chapter 13. Nope, it isn't. The instant restart, 19, of course. And that says that when you get to a peak D, other things can happen. Remember I spoke about it earlier? I'll talk about that in relation to what we see, but I think that we might be making some kind of a short-term top very within the next couple of days, if not today. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information.
And this is the pattern that I call the Eiffel Tower, because it goes straight up and basically straight down. But what we were really looking at was when this left side low was tested in the H pattern right there, look, when that was taken out, 1265, they said, oh, be careful, you can go right to the bottom or even lower. So this so far is a very positive action. So now let's get out of this, and I've got a couple of questions that I want to deal with, and I want to deal with them in a very interesting way. I want to go through some of the, just to show techniques, I want to show something. I've shown the other day that that wheat had a very strong move, and it had gone to a peak F, and it had pulled back. And I think on the day that I discussed it, it was just starting to move again. And what I said is I have no choice but to put this as a G/C. How do I get the C? How do I get the G? G is an extension of that F, peak F. After G, you don't get H's. So it says I've got to reassess. I've got to understand. And what I've done is I said if it's going to break down, it's going to have to break down to go from the left side to the right side, and the level that I'm looking at for major support is at 507 1/4. This is the continuous contract. I said the monthly chart was horrible. The weekly chart was just now, for the first time, whoops, let me go to back, showing enough strength to say that this rally might have some legs. We don't know, but it looks like this rally could have some legs, and that the 9-period moving average of 534 is very important support in the weekly chart of wheat. I don't trade wheat. You got some wonderful, people who do wonderful work on that. Andy Hecht does a fabulous job. Oh, I had to compliment him on something the other day. He was discussing the different months, and then he was discussing, I'll think about it. It was something very specific. Hopefully tomorrow I'll think of it, but I should do it. Today's Tuesday. I think he's on today. Oh, he's on straight after Dave White. But it wasn't it was a discussion about the different contracts. I'll have to think about it, but I thought, wow, that was what TFNN is all about, the discussion of the fundamentals. That's right. He said, I'm more of a fundamental a position player rather than a technical trader, and he was discussing one of the commodities in terms of the fundamentals, and I thought, gee, that's the kind of knowledge that you don't actually. I always say that the chart tells you the real story, but actually the longer term story is told by the fundamentals. If you have good fundamentals, you should have a good rise in whatever it is that you're doing. It's the same as in the market. Look, Apple's had really good fundies, and look at the way it's acted. All right, so now I'm also looking at C, that's corn. Corn had a big move up, and it went to a peak C, and then it looked like it was going to fail. And let me just see, is this a failure pattern, or is that a G/C? Let me just get there, move this out. It's an F. I already put that in. It was an F/C. And that's what you got to do sometimes. You see, when you make that cup formation to a higher high, you've got to watch the technicals, because you see how the stochastic did not confirm the rise in the price. The MACD did not confirm. This is that double camel hump. This is the M pattern that you see in the technicals very often, and if that M confirms, that's one thing, but if the right side of the M doesn't, that's a negative. So I'm looking at cotton, and it's stalled. It's under the 9-period moving average. Today it's just above it. This is a very important period because it could produce another. Instead of the W formation, patterns repeat over and over. This is the pattern we're looking at. Now there's a fight between this pattern, the bull side, and the bear side, which says, oh, is this going to be another H failure? So watch closely, because a close under 362.5 in the continuous contract would be very negative, and a close above 381.5 would say, we're going to test, and we're finally going to break out to the upside. Weekly chart is improving slowly, and that's something that's important. Always look at the longer-term chart formations. All right, so let me go to, let's see, I wanted to do that. High-grade copper. High-grade copper, look, plop. I'm a little nervous here, and that's the reason why I think that we've got to be ready. Some bad economic news is coming down the pike, and maybe before we have that big rally into 2015, we're going to have a sudden slide. That's what I'm a little nervous about. Our longs have done very nicely, but now it's getting a little harder to keep them long enough to garner really big profits. They're close to levels that they should turn around in, and I'm watching this just real closely. And in the larger context, high-grade copper, to me, is an important facet of the world economic scene. So we've got to keep that in mind. Now, here's another thing I want to look at. I'm going to go to the continuous contract of gold. Now, let's do this. So gold is holding very nicely here. The weekly chart is just starting to move nicely. All of them have had, certainly the stocks have had huge moves from the breakout back in 2010 to the high of September 2011 to these sideways moves that make the H pattern and then the M pattern, lowercase m, and then break down. This is going to be an important moment, because if gold is going to rally, it means the dollar right now should start its move down, gold should move up. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
And it's just tremendous. That's what it was. Congrats, Andy. That was really a terrific article. So let me go back to this. The instant restart. Well, first of all, it's a pattern that I call leg, body, neck, makes the head. This is what I call the stalk leg formation. You'll see what it looks like. It looks just like this right here. Looks like the leg, then it stands on one leg, stalks, and then it's got the long body, the big oval pattern, then the neck, and then the beak. And that pattern is familiar to us in terms of patterns that repeat periodically. And what I'm looking at here is that there's also the instant restart just at that moment. So we won't know if there's a doji. Let me put it this way. There's a doji close here on the QQQ series, trading with a high of 105.15 today. I'm suspecting that it's getting really close to at least a pullback to test the whole 101 to maybe 100 area, and then it might be have enough energy to move higher. But we're going one step at a time. And remember what I showed you on the Dow and the S&P at the weekly charts had an inside track reversal area that they were bumping into. They're right in that area. Well, so with the QQQ series. That allows for a move this week to 105.5. That's about 60 cents higher. Next week, that's 106.30. That's the area. So this should be a containment area as the price at least comes back and tests the 9-period moving average. Stochastic is at 97%. That is really important in my work. One of the reasons why, as of now, we have not gone short, because there's still internal strength. So the weekly chart, the daily chart would have to drop very sharp and very, not just quickly, but very sharply, and at least use up in the daily chart a good week and a half of downward momentum to really change the weekly chart stochastic. In the meantime, back at the ranch, what you've got is, look, Google is struggling to have a rally. Amazon, which we were long, got stopped out today for a little bit of a profit, and we might even do it again, seeing if we can get a leg D just above 338.33. We'll see what happens there. But in the stopped out, but I'm not sure if all positions were. Anyway, that's what I think. I just haven't checked during the break. So Amazon looks like it could go a little bit higher, but I'm not sure there's a major move yet for Amazon, unless Amazon starts to trade in the 345 area to 333. So I'm looking at the cues. I'm saying the rotational strength, sure. Baidu has been acting okay at high level consolidation, having made a peak F, but it hasn't really given anything up yet. It's got a wedge formation in the weekly chart. Got to watch that real closely. Hey, when I put this thing together, I'm saying to myself, based on action in the daily charts, unless there's an incredible rotational aspect that allows just some of the best to hold up the indices, we should get some kind of a pullback very soon that at least scares everyone a little bit, gets the VIX running somewhat. That's the way I'm looking at it right now, saying the upside is probably a little bit limited price line. I spoke earlier in my show about shorting. I said, don't stay short if it moves up. In fact, I think it's already up. Yeah, it's up 9.34. So price line, unless if it breaks through. And you've got Tom O'Brien. No, you've got, Tom O'Brien and NBS. So great program all the way through the day. And I'm on Tom later today for an interview. And have a great day. Yes, we can rally a little bit.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.